and welcome. You have tuned into Closing Trades right here on ET Now. I'm Shrishti Sharma and with me is Mansi Dave. And Mansi, it is indeed an expiry day. The first day where the markets are feeling that heat of 50%, and what we are seeing on the markets, no significant recovery from the day's lowest point, and we can call it that. But yes, of course, September series, Mansi, I believe is going to be even more exciting given the fact there could be some GST rate rationalization. We'll have that festive cheer. So let's hope for the best. But for today, seems like a day of declines indeed.
Absolutely, and Shrishti, it is a monthly expiry session today. But what's coming next? The NSE has revised the expiry day for all index and stock derivative contracts, and the next one will be from Tuesday. We'll talk at large on it, but yes, it was a wobbly start for the market, and at present, as we see, again challenging for the markets and talking levels 24,540. We do see downtrends both in the benchmarks as well as the broader markets, and this is the biggest news which we'll be talking in detail with the experts when they join in. But in the F&O universe, the NSE has revised the expiry day for all index and stock derivative contracts, shifting from Thursday to Tuesday. Now, the question is today's monthly expiry, but with effect from the next week, if this is going to happen, the next expiry will be on the coming Tuesday. So with that, we are just left with 2 trading sessions, and then we'll have another expiry. We'll have to talk about this because that will create a lot of uncertainties while we see the next expiry session. But yes, it is an uncertain market, and at present, a lot of volatility as we clearly see. And I don't think the FMCG sector also today is trying to help the market the way it used to, right, Shrishti?
But indeed, autos are, Mansi, because they are not shifting gears anymore, because it's two-wheeler pack yet again that is doing very well. Today we have that upgrade coming in from Jefferies as well, and it's Hero MotoCorp that is definitely leading the charts. Interestingly, it's Titan as well. In the last half an hour or so, the stock is seen to be gaining momentum and is the top gainer on the Nifty 50 side. Adani Enterprise, Asian Paints, Select Life Insurance counters, they are still finding that ground on the Nifty 50 gaining side. But on the flip side, very sharp cuts coming in on the IT majors. Along with that, Select Financials, they are under pressure, and these heavyweight counters, be it Reliance, HDFC Bank, they are reeling a bit under pressure, and so is the broader markets. Even they are not participating much in today's trading session. So all in all, not a great day for the market. Seems to be that they are digesting that 50% tariff imposition, and yes, expiry do have a role to play. But what your strategy be like? Should you really bet on the India growth story, or time to stay cautious? Let's try to understand that. We are being joined by Daljit Kohli, Head Equity at Roha Asset Managers LLP. Hi Daljit, very good afternoon, and thank you so much for your time. Markets at a very interesting juncture. There is geopolitical uncertainty around, but on the other side, we also have our internal triggers. Yes, case in point being that GST rate rationalization that we all are waiting by to help the growth of Indian economy. But how much of it, Daljit, do you believe it's already in the price? How much of the worries and how much of the excitement do you believe is already digested by the markets?
Good afternoon. Thanks for having me on your show. You see, we believe that India consumption story is here to stay. And India growth story is going to stay for a very, very long time. These hiccups are just temporary hiccups. Of course, whenever there is so much of geopolitical noise, so many things happening all across the world, obviously it will have impact on the market, and that will lead to a lot of volatility. But volatility is the thing that we have to live with. So in equity markets, we have now learned all this, that volatility will always be there. The big picture or the long-term story, I think, remains intact. We are quite bullish on the consumption story as such. We have already, just as a disclosure, in our consumption-related stories. So this GST cut, I think, is going to be a good game changer, especially for domestic consumption. So if you see for last 3-4 years, there was 2 problems which India was facing. One was on the urban side, too much of inflation. That over the last 1.5 years has subsided to a very large extent. It is no more an issue now. RBI has also explained in their various meetings that now it is not too much of a problem. Along with that, there is a rate cut cycle which has started. So if you see by historical evidences, whenever the rate cut cycle starts, equity markets tend to behave much better, and they always perform much faster. Second is on the rural side. So rural also for last 3-4 years was going through a bad patch. Sometimes erratic monsoon, sometimes uh, dis- dispersion of monsoon not in a very conducive manner. But in last 1.5 years, if we see, government has uh, dispersed a lot of money in rural area with all these Ladli Behn Yojana and other yojanas. So a lot of money has gone there. And incidentally, this time the monsoon has been very good. No? So all their stress has also reduced a lot. So which means that for both the engines, the rural as well as urban consumption, both are now poised for the right time to grow. So that will mean that, and if this is aided with the ease on the pocket through GST cuts, and if we are seeing maybe all across 5 to 7%, 10% kind of saving there, that will definitely start a new cycle of consumption. So we are quite hopeful. And only thing that we are looking now is that one, there should not be some devil in the details when these announcements are made and how fast these are made. They are very important.
That's right. Daljit, hi, good afternoon. Mansi, this side. Volatility is there and it is here to stay. Okay. But then it's not the tariff imposition which is hurting the sentiment of the market. It is the uncertainty. Like you rightly said, volatility. Having said so, at present, we are at a juncture where the markets literally are losing and surrendering to all of the important levels. It was 24,800, then we went down from 24,700 and now even lesser than 24,600. If you think this is the time, or maybe for the market participants who are listening to you through our medium and who has a capital and are willing to park it somewhere, where do you think they should consider? I hear you when you say that consumption is a piece which you are quite confident about. But other than that also, how should one diversify the portfolio?
Right. So see, first thing is that these kind of turmoils or these kind of uncertainties only create opportunities for long-term investors. So if you have that clarity in mind, then you can deploy at any point of time. You don't have to wait for one particular day or one particular time period when you will invest. So as an investment philosophy, you have to continue investing and continue evolving as and when these opportunities come. And assuming that these are temporary problems. So once we are very clear that these are temporary issues, we have identified consumption as one big beneficiary of that. Second beneficiary would be the sectors that are exempted or that are not part of tariffs. No, for example, pharma, for example, agrochemicals. No, those are the things which will not be subjected to the tariffs, or the impact of tariff will be much lesser because companies will be able to pass it on. So, for example, if we are talking of a generic pharma company, it is working on 10% margin. No way it can absorb 15%, 50%, 25%, whatever percent you want to put as tariff on it. It has to be passed on. And the guys who are buying this product, they also understand that this company with the ultimately this burden has to be taken up by us. Same way in if you are a CDMO player, then there is no problem because then your cost of the CDMO is only 2% or 5% of the total product. So then even if you put 20% tariff or 50% tariff, it won't make a difference. So you have to go sector by sector. You have to go company by company who's able to withstand this problem. And because of this overall mayhem, if the market has disproportionately punished something, that will give you an opportunity. And that is where you will buy, but it will look like as a contra call as of now, but it
Yes.
will do very
Well, indeed, we do take note of that, Diljit, and totally respect your view. But hold on to that all, lots more to discuss. But on the other side, because for now it's time to slip into a very short break. But before we do that, viewers, we spoke to market experts Prashant Jain, Sunil Singhania, and Samir Arora to understand the impact of US tariffs on the Indian economy, equities, and industries. Let's go across and listen in.
Large caps, to my mind, are looking reasonably valued. The risk reward is reasonable. So I would say the next 3-6 months offer a good window to medium to long term investors to invest. The impact of these tariffs in India will be very, very if I may say, in small segments of the economy. Our export of goods to US is just about 2% of our GDP.
The second half should get back to a level where earnings growth start to look at 14-15% plus. Now, obviously, this tariff 50% is like, most of the sectors which are impacted would not be able to export anything if 50% tariff continues to the US. But, the base case scenario which we are working on is there is an 80-90% probability that something will get resolved very soon.
It makes a difference to those sectors and to the people and those businesses and those jobs in textiles and in carpets and shrimps and all that, where a lot of people are employed. But from a market point of view, A, because these sectors are mostly unlisted, and B, because in absolute the numbers are very small from a country point of view. Therefore, from a market point of view, it doesn't matter. And also at the back of the mind, everybody broadly believes that this is a 3-6 month and not even 6 month, maybe 2-3 month kind of a situation.
Welcome back. You're watching Closing Trades, and the markets are constantly on a weaker mode. 24,514 levels on Nifty, around 200 points downtrends as we see, and Bank Nifty also. It's the fourth consecutive session where we see a fall in the Bank Nifty as well. The broader markets are also showing signs of weakness, but what should be your strategy in this volatile scenarios? We have Vinay Rajani, Senior Technical and Derivative Research Analyst, HDFC Securities, with us. Vinay, good afternoon. Thank you for giving your time to ET Now. And the markets at present are constantly weak, and as we do see, be it the benchmarks, the broader markets and the sector-specific approaches, it's a constant weakness, of course, on the back of the global as well as the domestic triggers. Can't forget the monthly expiry session, which is today. What's your take on the indices to start with?
Yeah, good afternoon. So in last 5 trading sessions, we have seen a fall of more than 650 points in the Nifty, and for last 2 trading sessions, momentum has been clearly into favor of bears, and clearly the trend has been down, and we should not try to anticipate bottom. The existing trend is bearish, at least on the short term chart. The immediate support which I see for the Nifty is around 24,340, which happens to be the previous swing low. The 200 days EMA is placed around 24,267 to be precise. So we can say that there is a support between 24,260 to 24,340. This is 60-70 point support band is there where Nifty should go from here. So still we can say 150 to 200 points downside is there. Before that, I don't see any short-term support coming in for the Nifty. So bearishness is there. Momentum is going high along with the price fall. So that is clearly indicating a bearishness in the short term. So we are expecting 200 points more fall from the current level, and I think that will we can see after in next couple of sessions. So overall trend is bearish, and today's high becomes a strong resistance, which is around 24,700.
Trend has changed completely, and the overall trend is seen to be bearish right now, and today's high is seen to be as resistance as well. That's the take coming in from Vinay. But along with that, let me also welcome Akshay Bhagwat on the show right now. Hi Akshay, good afternoon and good to be speaking with you. But Akshay, the other fact of the matter is that from next series, the expiry will happen on Tuesday versus Thursday for now. And this is a very short expiry gap in between that we will have. And post these expiries, and especially the monthly expiries, we see traders shifting to the others expiry. They try to make some spreads out here and work on to some strategy. I'm not an expert here, but why don't you help us understand that how are you guys looking at this short expiry? What sort of a build up? Is there any, if at all, with respect to the Tuesday's expiry right now?
So first of all, good afternoon.
Good afternoon.
Yes, there is a change in the expiry day for both the Sensex as well as for the Nifty going ahead from 1st of September as per the new rule. The Thursday's expiry for Nifty would be shifting henceforth to Tuesday. So what advantage does one have over here is that, for an option writer, because primarily these strategies or any kind of, strategies which the traders build, they need need to have a control over the time value aspect of the options Greek. So here is a scenario where Saturday, Sundays being the weekly off, that is the time when you get the time value depreciation in the positions ideally which are created on a Thursday or a Friday. So, with a expiry now moving from Thursdays to Tuesdays for the Nifty, the expiry, although moves from Tuesday to Tuesday, the Saturday, Sunday time value which works in the advantage of the trader, assuming the market opens flat on Monday, works in the favor of option writers who majorly are the gainers in the strategies which they set. So this is a very positive, I would say, move if Nifty expiry, because Nifty is one of the most liquid and highly traded product in the option segment. So the sense is that shifting Nifty expiry from Thursday to Tuesday works or augments well for an option trader because in prior scenario you had to wait more, you didn't get the advantage of Saturday, Sunday, but now it works more in your favor. But anyway, a person who's more interested in trading volatility, then you have the Sensex, which now would expire on Thursday of every week. And this is one product which is highly volatile product. And considering the nature of this product, I think Thursday suits or would work well, ideally both for a writer or for a buyer. So I think in one sense, this is a good move going forward with Nifty expiring on Tuesday and Sensex on Thursday. So we'll have to see how it works out. But definitely, I read this as a positive move for option writers who are more keen on the Nifty as a product.
Absolutely. Vinay and Akshay will come back to you for your closing trades and stock-specific approaches as well. But Daljit, before we let you go, on both of these important news flows on the derivative F&O front, one is NSE is planning to shift the derivative expiry from Thursday to Tuesday, and the second one is on BSE introducing pre-open session for futures with effect from 8th December 2025. So we have time there. But what are your views on both of this? Could shifting expiries to Tuesday help reduce volatility seen around weekly F&O expiry sessions? And how significant is BSE's move to introduce a pre-open session for index as well as stock futures?
Mansi, in a sense, it is good for me that I don't have to worry too much about this because we take very long calls, 3 years call. So for us, it doesn't matter on what day the expiry happens and not. And in fact, most of our stocks, the 30 stocks that we own, we have a mandate of small and mid cap stocks. Most of them don't fall into any of these indices. So we don't have to worry too much about what is happening. But yes, market, nothing works in isolation. With these changes, how, as my friend was talking, that we'll have to wait and see how these traders adapt to this and what kind of volatility it creates. Of course, any change happens, it will take some time to adapt. So we'll see how things will move. Finally, traders will ultimately adjust to whichever day trading you do. No, if you open markets open, currency markets open 24 hours, 22 hours in a day. So people are working at some pace, some time. People will adjust. For as investors, I don't think it makes any difference.
All right, Daljit, respect that thought. Thank you so much for taking the time out and speaking with us this afternoon. Thank you so much for that. But with this, viewers, let's also get you some of the trading ideas from both of our experts then. And Vinay, you go first. Tell us which is the stock that you are tracking at this point in time.
Yeah, so today some IT stocks are looking weak on the charts, and some stocks like HCL Tech is one of the stock which has given a fresh breakdown on the chart. So after some pullback, the stock has resumed its downtrend. So HCL Tech is looking weak on the chart. Considering the technical setup, I would go short in the HCL Tech September future around 1462. I would keep a stop loss at 1486, and on the downside, I'm expecting a target of 1435 next couple of sessions. The second pick I would take from the auto ancillary in auto space, we can say, because the entire auto has been doing well, and Endurance Tech is one of the stock in the mid cap auto space which is looking good to me. And today it has given a breakout on the flag from the flag pattern on the daily chart, so looks convincing. In the intraday, it has seen some correction from the higher level, but overall I see some long evidences, and one should trade long in this. So Endurance Technology around 2865, 2860, one can go long. I would suggest a stop loss at 2760 On the upside, we can expect a target of 3040 in next 1 week.
A buy strategy and a sell strategy. Sell HCL Technology September futures for the target price of 1435 and a stop loss of 1486. And Endurance Technology, there's a buy strategy coming from Vinay Rajani with a target price of 3040 and a stop loss of 2760. Akshay, what will be your trading ideas for the day? Closing trades.
Yeah, so I have one short recommendation and one buy recommendation. The short recommendation is the stock which has seen a significant breakdown in today's trading session. That is the name on most of the traders' minds, Shriram Transport Finance. This stock has seen a major break of the support zone of 600, which has been holding for the last 6 to 7 odd weeks. So it's a major technical short-term weakness which triggers this, and that is the reason you are seeing such significant fall in the stock. With this fall, I think the stock is possibly heading for downside targets till 520. And for any positions which are short in this, you need to keep a stop loss of 612. The other trade is in Maruti Suzuki. So if you look at the price chart of Maruti, the auto space obviously has been doing well, but Maruti has seen a major price breakout of the levels of 12,700 a few trading session back. That puts the stock on a very strong momentum footing, and possible projections work till targets of 15,300 on Maruti. You can maintain a stop loss of 14,276 on this long trade in Maruti.
All right, those are the trading ideas coming in from both of our experts. Let's watch out for that. But with this time now to slip into a very short break yet again. Don't go anywhere as we come right back. We'll be speaking with Jonathan Chajel, Deputy CIO of Westminster Asset Management, just after this quick break.
Welcome back. You're watching Closing Trades, and ET Now exclusive. Sources tell ET Now that a big relief may be on the anvil for fertilizer sector. The GST Council may slash tax to 5%. Prakash is here with all the details of the same. Prakash, over to you.
A very significant development coming in and a big relief is expected for the fertilizer sector, as we are learning from our sources that the GST Council is likely to address inverted duty structure in the fertilizer sector. A very significant development coming in. In fact, GST Council may decide to levy uniform 5% GST on both fertilizer inputs and final products. Currently, inputs such as ammonia, sulfuric acid and other raw materials are taxed at 18%, whereas finished fertilizers attract only 5% GST, which leads to duty inversion cases. And therefore, central government has also supported addressing duty inversion cases, which is part of its comprehensive proposal to the GST GOM as well. A very significant development coming in. GST Council is likely to take the final call in the next meeting, which is scheduled for September 3 and 4. Along with that, GST Council may also approve Centre's proposal for a two-rate GST structure.
Well, indeed, two-way GST structure in place, and now it could be the fertilizers which could be likely beneficiary as well. That's the exclusive story that our reporter got for you, Prakash Priyadarshi. Thank you so much, Prakash, for getting us all those details. But with this, let me also welcome on board Jonathan Chajel. He's the Deputy CIO at Westminster Asset Management. Hi, Jonathan. Good afternoon and good to be speaking with you. And Jonathan, for the Indian markets, the biggest trigger that is seen to be the GST rate rationalization. Help us understand how the investor community is sharing this particular move, and within sectors, which sector is garnering the most excitement right now?
Hi, good afternoon. I think it's clearly a positive announcement. We don't tend to get too wrapped up from an investment perspective for ourselves with these sort of developments. We're more long term, but clearly these are moves afoot to try and spur certain sectors, and obviously you've covered this extensively already. So yeah, it's not something we get too wrapped up in, if I'm honest.
All right, Jonathan, hi. In the last few months, the kind of sideways momentum and the correction that we have seen in the Indian markets, have you used this opportunity to buy something fresh or increase your exposure in any of the sectors? What are the sectors on your radar?
To be honest, we took a little bit of weighting down a few months ago. We haven't reallocated any money back into the broader Indian market or specific stocks or sectors at the moment. We have very long-term holdings that we're happy to stick with, but we had taken down, one or two stocks a little while back. The market as a whole, obviously has been ingesting what's been happening on the tariff front more recently. We're a little bit off the highs quite clearly. We're still above the lows we saw a few months back. But the reality is, when you look at India versus other markets, I think there's a bit more excitement in the short term elsewhere, particularly in the Chinese markets, which have been very strong. So probably for the moment, unless India comes off a little bit more, we'll probably be just content with our sort of more neutral type weightings we have currently.
More neutral on India, but Jonathan, if not India, then which markets are looking good to you right now? Because yes, for India, the tariff has been 50%, but for some of the other nations, the trade deal is already through. As an investor point of view, which markets are you finding lucrative at this point in time?
Yeah, I mean, there's been, as I just mentioned, quite a lot of activity in Hong Kong and the Chinese markets, which have performed extremely well this year. I think also some of the smaller Asian markets, the ASEAN markets, have done pretty well as well, although they have seen some money leaving to head for China. I think most investors, perhaps excluding some of the US investor base, but a lot of investors have been reallocating back into China that, quite frankly, a year and a half, 2 years ago, was viewed as virtually uninvestable. So the markets there are still looking quite good value. They have rallied hard, but they've come from a very low base, and valuations still look quite attractive, and there seems to be stuff going on. The reality is also the tariff uncertainty is still ongoing with China, and the market's not really worried about that too much in the short term. But yeah, we still we quite like the look of China here at the moment. It still looks we've got a bit of runway, I think, for those markets.
Okay, Jonathan, what's your view on the energy basket and the precious metals, the bullion market? If we talk about the energy basket in particular, oil is edging up on US crude stock drop and the impact of the tariff scenarios. And at the same time, the precious metals and the dollar and yield scenarios, if you see so. Looking at the currency structure, the bullion market or the energy pack, all in all, the commodity front, if at all you have any view, please share.
Yeah, look, we like commodities broadly. I think the precious metal space is a very interesting one. Gold's clearly been on a phenomenal run the last few years, and quite frankly, it's been consolidating its gains over the last couple of months. But clearly, a big driver for precious metals is what's going on in the US with the worries over the dollar, worries over the independence of the Federal Reserve. And that's providing a good backstop to precious metals and gold in particular. So I think it has been working off its overbought status, and we're quite optimistic. I think on a shorter term that gold probably will at some stage push on higher again, because the factors that have pushed it up haven't gone away anytime soon. On the energy front, we have exposure to the energy sector. We have pulled that back somewhat recently. Obviously, we've seen quite a lot of news out of OPEC about increasing supply. Yes, there's stuff going on within Russia and the ongoing Ukrainian conflict, which is relatively bullish for the energy complex. But I think excluding that, I think the energy complex energy prices probably do look like they want to head a little bit lower, not too much. On a medium term basis, we're actually reasonably positive on the energy complex and think the energy prices are quite cheap here, and that if you believe inflation is a problem a little bit further out, then energy probably looks quite a good hedge against that.
All right, totally take that point, Jonathan. But with this in the show, it's time now to slip into a very short break. Just a few minutes left with
potential value unlocking announcements. But at present, Just before the AGM, it was volatile during the trade, and right now we see some sort of buying interest over here. What's your view on Reliance?
See, this is more of a short-term trader's bet because if you look at the price charts for the last 4 weeks, there has been some support which has been building around 1370 odd zone. So it is following the same odd pattern where today we made a low of almost 1366, and as I see, there is a slight intraday bounce back, possibly on some hopes of some positive takeaways from the news which you just mentioned. So it's a completely short-term trading bet. Yes, if this support holds, once again, you can look forward for trading targets till 1420. But really, as it stays right now, there is a support in the building of for Reliance, but no convincing chart pattern which suggests any major upside of over 5% as of now.
So that's the technical take coming in on Reliance. But yes, like Mansi has been telling, that a lot of these expectations is what market participants are having from Reliance right now with respect to the AGM announcement. But what exactly are they? Let's get in that list. And my colleague Ashesha is joining with exactly that. Ashesha.
Well, yes, all eyes will be on Reliance Industries ahead of its AGM, which is scheduled to happen on the 29th of August at 2 p.m. And any kind of commentary that comes in from the management with respect to potential listing of Reliance Jio, that will be a key trigger for the stock going forward and perhaps value unlocking for shareholders as well. AI related plans and expansion in FMCG and retail, this is also something that the street will be keenly watching out for in terms of the kind of commentary that we get from Mukesh Ambani. Let's also put the spotlight on the kind of announcements that we have seen over the last few years from Reliance Industries AGM. In 2018, they announced the launch of Jio Phone, which was available at 2999. The big Aramco investment was announced in 2019, that was 1 year later. We also had a whole host of announcements that came in over the last few years in 2020, 2021 as well. But most important announcement came in last year where they announced bonus issue in the ratio of 1:1. In 2022, 2 lakh crore of investment was announced for 5G. The retail also announced entry into the FMCG business. That was also a key trigger for the stock. And as I mentioned last year, they announced bonus issue in the ratio of 1:1. And some important commentary came in with respect to their telecom business, where they say that they aim to double their revenue and EBITDA over the next 3 to 4 years as far as Reliance Jio's performance is concerned. So some important commentary that we have seen from Mukesh Ambani in its AGM over the last few years in Reliance Industries. Meanwhile, as far as the stock performance is concerned, we try to analyze the data and try to decode how the stock has moved 10 days prior to the AGM, on the day of AGM, and 10 days after the AGM. In 2019, the year in which we saw some big announcements, the stock shot up nearly 7.5% 10 days prior to the AGM. In fact, the stock was up 10% on the day of AGM, although we saw muted performance after the AGM was actually done. In 2024, that is last year, the stock shot up nearly 2.5% before the AGM, and on the day of AGM, of course, we didn't see much announcement. So yes, some big announcements, if at all they come through, perhaps we will see the stock in focus tomorrow on the back of that.
All right, thank you so much, Ashesha, for getting us all those details. So tomorrow, all eyes will be on